Hi everyone, welcome to this time's Grounding Finance. Well, stocks market was showing itself last week, which made China's bonds market more gloomy. The stock bond seesaw effect has been pretty obvious this couple of weeks, and is becoming the core factor influencing sentiments and strategies in the bonds market. So as usual, let's have an overview of the bonds market, then check out the details part, alright? Total bond yield curve was more upward and flat compared to last week. Yields of 3, 5, 10, and 30 years terms went up 3.6, 3.7, 2.2, and 2.3 basis points. If we compare to the one of December 9th last year, the curve kept twisting and flat. Yields of 3 years term went up 3 basis points. 5, 10, and 30 years terms went down 5.6, 22, and 24 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds fluctuated around its real-valued yields, with the 5-year spread was 41 basis points. About the actions of investment agencies for short and middle-term bonds, big banks and policy banks bought 122 billion yuan together. Joint stock banks sold 72 billion yuan. And for long and ultra-long-term bonds, agricultural and commercial banks bought 140 billion yuan, whereas funds sold 69 billion yuan. Next, let's check out the details part and see what happened last week. In terms of fundamentals, first, CPI and PPI came out, which were 0.1% and minus 3.6%. CPI was better than expectation and above the zero line, which was a good sign. Consumption finally got a warm number under a bunch of stimulated policies. But does it last, or just a temporary figure? Unfortunately, PPI wasn't that luck. Minus 3.6% was worse than expected, minus 3.2%, and previously minus 3.3%. The inner competition in the industries has been brutal for a while. Enterprises fight to each other just for living. So the index kept falling. But the good news is that the government has launched involution curbing policy and may have a good effect, which is expected easing the bad inner competition and moderately boost the price level in the supply side. And the rumor says that the government will figure out more policies to improve the economy. If we put these things together, the cloud of China's economy has its own silver lining. Second, stocks market, which has been the superstar these days. Under effects of trading gains and other good macro factors, China's stocks market has its 10 consecutive days upward, which was pretty rare, and kept overwhelming the bonds market. Third, Trump made his tariff bill clear for 25% to 40% level to several countries like Japan and Korea, but China, TBD. All in all, there are a lot of factors influencing the bonds market. Good ones are not that good situation of China's economy and uncertainty from Trump. Better ones are good expectations for the economy and further policies, plus the risky emotions in the stocks market. So from long and ultra-long-term view, bad factors overweight good factors for now. We would better take a defensive position. For funding conditions, the PBOC squeezed liquidity for 220 billion yuan last week, but the financing price for non-banking agencies went down to 1.44% for overnight. So the total situation was like tight in the volume, but loose for financing price. The attitude of the PBOC to the bonds market seems like neutral but inclining to moderately loose. So from short and middle term view, the situation is good and stable, but just with less trading gains. What should we care next week? First is financial data and economic data of second quarter to check us out the situation of first half year of China's economy. Second, the performance of the stocks market, which may become a trend and change sentiments in the capital market. Third, further policies from the government and treasury bonds purchasing from the PBOC. About bond investment strategies, I can say now, seems like there gonna be a change, but I don't know the direction. Let's just first take a defensive position, then take duration strategies as a backup plan, alright? Anyway, don't sold out your position. We have to have some base position in any case. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.